Let's take a look at the 2025 housing forecast from Realtor.com. Mortgage rates are expected to keep mortgage payments essentially unchanged in 2025, despite continued home price growth. With a Trump victory in the 2024 election, the U.S. housing market could see significant shifts, from regulatory changes to tax policies, and potentially even a calibration of housing supply and demand dynamics, especially since President-elect Trump is a developer himself. Under the previous Trump administration, we saw tax cuts, deregulation, and the push for economic growth through business-friendly policies. Many of these initiatives could return in 2025, potentially affecting everything from mortgage rates to new construction projects and home ownership affordability. In this forecast, I'll explain what home buyers and sellers can expect from the housing market in 2025 while considering key factors like government policy, market conditions, and the ongoing challenges of housing affordability and supply. Let's start with the trend in home prices. This past year brought a surprising upward trend in home price growth despite the persistence of high mortgage rates and rising inventory. The full year expectation for 2024 home price growth was 4%, which is up significantly from the 1.1% rate of 2023. What's more, we expect home prices to continue to rise in 2025, although at a slightly lower pace of 3.7%. The reason for that is mortgage rates are expected to be slightly lower than they were in 2024, with an average monthly rate of 6.3% and a year-end rate of 6.2%. We're also expecting existing for-sale inventory to be 11.7% higher in 2025 than in 2024, as shown in the graph. While mortgage rates are expected to keep mortgage payments basically unchanged in 2025, despite continued home price growth, higher economic growth under the Trump administration, which markets are currently anticipating could lead to a boost in incomes. And if effective household tax rates go down as promised by the Trump campaign, we could see an increase in disposable income, even if incomes don't rise. If both income growth and lower tax rates come to fruition, we could see homes become somewhat more affordable in 2025 than in the past couple of years. Next, let's take a look at the home sales trend. The forecast for home sales trends is slightly upward, with an expected annual count of sales to be 1.5% higher than 2024 for an annual total just over 4 million sales. There's evidence that both home buyers and sellers are sensitive to mortgage rate fluctuations. As the market saw a retreat of mortgage rates to 6.08% in September of 2024, we first saw an 11.6% bump in new listings, followed by a 9.9% increase in home sales the following months, suggesting that there is a rate-sensitive, pent-up demand in the marketplace, and that is certainly true here in Traverse City. The for-sale inventory trend is also looking promising, with a forecasted increase in inventory of 11.7% compared to 2024. October brought the U.S. housing market the largest account of active home sales for sale since December of 2019, and that trend will likely continue in 2025. Of course, timing of inventory matters. With mortgage rates likely to end 2024 at a higher level than expected, the willingness of homeowners to sell their existing homes and buy new ones will be lower. Thus, will likely lead to a small increase in inventory at the start of 2025, but by the time things get going in the spring, inventory levels should climb again over and above the usual seasonal boost. Housing inventory will remain high throughout much of the summer due to both an increase in new listings as well as that unsold inventory that has accumulated during the winter months. What will the market be like for home buyers, especially first-time home buyers? Well, home buyers hoping for a lasting return of September's 6% mortgage rates are likely to be a little disappointed. They still expect the long-run trend and rates to be downward, but you have to understand we're starting from a higher current level, and that put rates to track towards 6.5% by the end of the year. There will be volatility around the average, so there are some home buyers that will catch a lucky break here and there, but my best advice is to plan around that budget for around the mid 6% range. On the bright side, home buyers who have been frustrated by higher interest rates will have some buyer-friendly items, such as the highest for sale inventory since December of 2019, the lowest seasonal market in 5 years, and nearly 20% of listings coming with price cuts. As discussed, mortgage rates are expected to improve slowly in 2025, but the drop likely won't move the needle back toward a seller's market too much. Buyers should expect a friendlier, less competitive housing market than past years, although one that is still costly to distantly high, moderate, and home prices. In fact, the month supply, which is a key market balance indicator, is expected to improve from an average of 3.7 months so far in 2024 to 4.1 months in 25. Anything under 4 months is typically considered a seller's market, while a supply of 4 to 6 months is typically considered a balanced or neutral market. But I certainly do not expect to see a supply above the 6-month range. That would signal a buyer's market. First-time home buyers were a record low share of home buyers in the past year, unfortunately, due to the high cost for buying relative to renting, historically high home equity among repeat buyers, and there was a pickup in investor market share as well. Those were just tough to contend with for new buyers. On top of that, some campaign promises of a potential $25,000 down payment assistance to first-time home buyers caused a lot of them to sit and wait it out for the election results. How can home buyers prepare? Well, buyers will have more time to make purchase decisions, but a fast-acting buyer will have a higher likelihood of making the winning offer. For this reason, it's wise to get prepared financially. Fortunately, there are more tools available than ever before to aid in getting ready. Now, what will the market be like for home sellers? Limited inventory and strong demand in many areas, especially our area, could mean that sellers still have the upper hand in terms of negotiating prices. This is certainly true in Traverse City, northern Michigan. However, the higher interest rates were slower than expected, and income growth could lead to fewer buyers being able to afford homes, which might result in longer selling times or price reductions in some markets as a result. Sellers will need to price carefully to attract buyers, especially here in Traverse City, where affordability is an issue. Flexible selling strategies such as offering incentives like paying for the buyer's agent commission or other closing costs, or offering rate buy downs, etc., may help sellers stand out in a more competitive or uncertain market. Whether there's potential for a favorable market for sellers, the overall landscape will depend, by and large, on the economic conditions, interest rates, and housing supply. We're going to see this evolve over the first few months of the year. Thanks again for watching. Remember, don't sell without the intel. If you're looking to buy or sell, especially waterfront property, we're here to chart the course. See you next time.